Today we are talking all about mortgage interest rates, and we'll be focusing on whether it's possible to get a mortgage interest rate of less than 2%. Hi, welcome back to our channel and podcast. My name's Gemma, and here at WIS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Ifti joining us. And for those of you who don't know Ifti, Ifti is a trained accountant and mortgage advisor who has been in the industry for over 11 years. He is also one of the founding directors here at WIS. Welcome back, Ifti. How are you?
I'm very well, thank you, Gemma. Yeah, how are you doing?
I'm good, thank you. Today we're talking about a pretty hot topic, aren't we?
That's right, yeah, interest rates, yeah.
Yeah, interest rates. Oh gosh. So, okay, let's get straight into it. What is currently going on with the interest rates?
I guess the answer is I don't know, right? I mean, it is like that at the minute, right? It's very much a sort of a moving goalpost at the minute, right? Because sometimes we give rates to a client, right, in the morning, and in the afternoon we had to call the client and say, look, we have to apply now. Yeah, otherwise you won't get the rate tomorrow, right? So, some people think it's a marketing ploy. It's not, right? It's just the rents are changing, right? And it's happening very frequently with most of the banks, right? Everybody is doing it, right? So, so that's the problem we're having at the moment. The interest rates are going up and up and up, right? So, I mean, if you go back 3 months, we found rates less than 2%. Today, it's very difficult to find those deals, right? So, yeah.
Yes, I think we're getting some customers that perhaps spoke to us back in March or something, and they're sort of coming back now like, I found a property, like, and then they're just getting a complete shock that the rates have massively changed.
Yeah.
So the question is, can anybody actually get a deal with less than 2% interest?
Very good question. Yes, for some, and not for some, right? So yes, you can get interest rates less than 2%. Let me sort of explain this. I'll have to be very clear on what I'm saying, right? So if you're looking for a fixed term mortgage, like a 2-year fix or a 5-year fix, it's pretty unlikely that you're going to get a mortgage less than 3% at the moment. Even if you have a massive deposit, right? It's very unlikely that you're going to get a fixed deal, right? So that's kind of out. That is as of today, right? So at the time of shooting this video, we are end of July. But obviously things can change over the next few days, weeks, right? So we don't have control over that. But as of now, no, you can't, right? But then there are certain mortgages which are variable mortgages. Now those, we can see some of them which are under 2%, right? But it's variable, right? So it comes in the form of a discounted mortgage, or it comes in the form of a tracker mortgage, right? But it's more the discount ones that we find. We find those under 2%. But that's the interest rate. Please note that, interest rate is not always what we need to look at. You got to look at the interest rate, product fees, and any other associated costs to do with the mortgage as well, right?
Yeah.
But to be honest, the other costs are more or less in line with the fixed deals. But obviously the interest rates are less than 2%. So we are still seeing some of those at the moment, right? So there is an option.
Getting your mortgage online doesn't have to be complicated. At WIS, our website will help guide you through step by step. Our fully qualified advisors can help you get the most suitable mortgage for you. Then you can relax, safe in the knowledge that WIS are working in the background to get your mortgage approved. WIS. Online mortgages made simple.
All right, well then what is a discounted rate for those of us who are wondering?
Okay, cool. So discounted mortgage is a variable mortgage, right? So there are different types of variable mortgages, but one is the standard variable. So for example, if you go to X-Bank, they would have their standard variable rate, the rate at which they lend to a client, right? So that's the standard variable rate.
Otherwise known as SVR.
Yeah, otherwise known as SVR or reversionary rate, right? So when your deal finishes, that's the rate you're going to go into. Then you have the tracker. That's the most popular one, right? So that is also a sort of a variable rate. Now, tracker tracks your interest rate against the Bank of England base rate, right? Say, for example, the Bank of England base rate is, let's say, 1.25%, right? If the bank says your deal is 1% above Bank of England base rate, so that means your mortgage interest rate is 2.25%, right? So that's what you're going to pay. But tomorrow, if the Bank of England base rate increases by 0.25%, then your interest also goes up by 0.25%, which means now you're paying 2.5%. Okay, so this is the difference between the discount and the tracker. The tracker tracks the Bank of England base rate, right?
Yeah.
But whereas a discounted mortgage is slightly different, it tracks the bank's rate or the SVR. So that's why I explained what SVR is at the beginning, right? So most of the discounted mortgages are tracking against SVR. So for example, X Bank says we will give you a mortgage at a 3% discount. They're talking about 3% discount on their standard variable rate. So if X Bank is 5%, 3% discount, you're paying 2%. Now, tomorrow, if X Bank increases their rate to 5.25%, your interest goes up by 0.25% as well, right? So it goes from 2% to 2.25%. So that's what normally happens, right, with this. So it's not connected to the Bank of England base rate, it's connected to the bank, right? But most of the time, banks change their SVR when Bank of England base rate changes, right? But it doesn't necessarily have to do that, right? So for all purposes, it is the bank's rate, right? That particular bank's SVR, so it's tracked against that, right? So that's what it means.
How often can the discount rate go up or down?
It's a difficult question to answer. It depends on the bank, right? But most of the time, I mean, looking at my sort of experience, they kind of look at what the Bank of England is doing, right? More or less, but it's not always the case, right? So the Bank of England, if they increase by 0.25%, they also do, but some banks don't, right? So because they don't have to, right? It's not connected to that, right? So yeah, it's very difficult to say, but most of the time it's more or less in line with that, right? But there are other factors they look at as well. So it's a difficult question to answer.
Okay, so then what are the advantages then of choosing a discounted rate mortgage, would you say, FD?
The advantage mainly lies if, obviously, I've got clients who I did a mortgage, say about 1% interest rate, slightly more than 1%, right? Now they come 2 years later and they say, look, I want a deal. And I say, look, the rate you can get is 3.25%. So he's going to pay 2% more interest. It's almost gone thrice over, right? But he used to pay as interest. So that's a massive shock for most people because most people don't know, right, what the interest rate is. So for somebody like that, this might be sometimes a solution because at least for now, they'll be paying, say, let's say the discounted rate is 2.5% and fixed is 3.5%. So for now, he's saving 1%, right? So his alternative, which is a fixed one, is 1% more, right? So obviously he's taking a chance, right? It is a chance, right? Because obviously the interest rate might go more than 3.25%, in which case he's paying more, right? But some clients are very happy to take that chance, right? Because that's the main advantage because they say, okay, it has to go up by 1% at least before we start paying what we were supposed to. Yeah. So that's kind of what the advantage is, right? And some people say, okay, you know what? We'll wait, right? If that happens, we are saving money now. If we had to pay extra later, fine. Whatever we save, we will use that carefully and we'll pay it against that, right? So some people like to think like that. So for people like that, it's worth, right? Because, obviously you can save now and at least, you're not shocked immediately, right? Because if you're going for a fix immediately, you're going to feel the pinch immediately, right? So at least it gives them time to phase themselves out and, be ready sort of thing in case the interest rate goes up further, right? So that's the main advantage with the discount because you will get, obviously the rates are cheaper at least for now, right? But the disadvantage is you have no control over the interest rate, right? You just don't, right? Because if the bank tomorrow decides to increase the interest rate, your interest rate goes up, right? So you don't have control over that. If you're going to come off the mortgage, you may have to pay early repayment charge. So that's something you might want to avoid as well. So you don't necessarily have control over that, right? Because if it's fixed, you know how much you're going to pay. For budgeting purposes, If you're paying £1,000 off the mortgage every month, that's what you're going to pay in the next 2 years, right? But here, you don't know what it's going to be. So that is the risk that you have, right? So that's the biggest disadvantage in a discounted rate. So that's why people sometimes is put off by that because they say, we don't know, right, where it's going to go. And some people are a little scared as well because they're saying, okay, for your Bank of England, they look at the whole economy and they decide. But whereas if a bank, they can decide if they want to be profitable. I don't think it happens like that, but this is the way people think, right? They can just overnight increase their standard variable rate and we will get affected, right? So people are a little worried about that, right? But that's mainly because you don't have control over it. So that is sort of the biggest downfall with discounted rate.
Oh, well, thanks, Sifty, again for some more great advice. I just wanted to make a reminder that these points may or may not be applicable to everybody. So if you are unsure if they're suitable for you, then please do check with an advisor. And if you don't have an advisor, I will leave our WIS contact details below, as we're always more than happy to help. Another little reminder that as your mortgage is secured against your home or property, it may be repossessed if you do not keep up with the mortgage repayments. Thanks for joining us again this week. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.